Morning, welcome to End of Week Ainsley News. Today we're talking end of the road with Steins Law. Gold and silver had another solid night last night. Gold up $21 in US or 1.1%, and silver up 68 US cents or 2.7% respectively. And that was off USD weakness and saw the AUD rising again to over 76 cents. And hence the AUD gains were slightly lesser, the $11.69 respectively. Last night saw the USD enter an 80 candle for the first time since April 2018 at 89.77, as this was written this morning. The USD has been in decline ever since the liquidity crash-induced spike up in March of this year. Got a chart here showing the DXY index chart there. In contrast, gold has been one of the best performers of 2020. Here's that gold chart. That is completely logical, as the Fed and US government have unleashed unprecedented money printing that should debase the value of the currency they have been printing more of. Gold, on the other hand, is real money, the supply of which only expands at around 2% per year, and hence has intrinsic value. However, the two don't always enjoy such a perfect negative correlation. If we zoom out a little and go back to the last time the USD sunk to such lows and then rallied generally right through to March this year, you can see that gold generally rallied in unison. Here's the DXY index chart all the way back to 2016 to 2021, and we'll follow that up here with the gold chart back to 2016 to 2021. The very simplistic story is of the Fed tightening, the USD rising on that, the gold market saying this is not going to end well, it not ending well, the December 2018 crash, the Fed unleashing stimulus like never before, the USD falling, and gold again saying this is not going to end well again. In December 2018, the share market finished a 20% fall because the market realized it needed the stimulus the Fed had withdrawn. The question is, will December 2020 see a similar correction because the Fed inflated the market beyond all reasonable sense? The level of euphoria would suggest that it's unlikely to happen just yet, but a strongly rebounding gold and silver price may well again be that smart money signaling that they think it is. As Roll Powell tweeted last night, it looks like gold is indeed breaking out. Here's that tweet from him. Germany's second largest bank after Deutsche Bank is Commerzbank. They've just come out predicting 2,300 gold next year. We do not expect a change in the ultra-expansionary monetary and fiscal policy despite the upcoming vaccinations. Instead, governments and central banks will continue to be required to cushion the negative effects of anti-corona measures of the economy and society. If the necessary fiscal stimulus measures are not adopted in time due to resistance in the legislative process on central banks to step up into the breach with further easing measures would increase. Talking to the bit that has markets really torn, i.e. the vaccine fixing everything, they remind us that there's not the small issue of the legacy. Even if, as we expect, the corona pandemic can be brought largely under control in the second half of 2021 through sufficient immunisation of the population, the enormously increased public debt levels caused by the corona policy and the inflated balance sheets of central banks will remain in place for a long time to come. The Fed does not intend to change its monetary policy anyway until inflation is slightly above 2% for a longer period of time, and full employment is achieved. Both criteria together have rarely met in the last 20 years. While central banks have eased off on gold purchases this year as they concentrate on printing money, it is that very action or the effects of it that they believe will drive up central bank buying again. The arguments in favour of gold have not changed for the central banks at all. The US dollar denominated bonds held in the foreign exchange reserves hardly generate any positive nominal yields. In fact, the real interest rate on these bonds is almost entirely negative. The euro-denominated bonds even have a negative nominal yield. The price development of gold in this challenging year has also shown that gold offers great advantages in an integral part of foreign exchange reserves. Part of what drove gold higher in 2018, despite the Fed tightening, was the epic amount bought by central banks that year, the highest on record. As the USD rose on the back of the Fed tightening, all that USD-denominated debt in emerging markets in particular was getting very expensive. An EM crisis was looking more and more imminent, with cracks already appearing in Turkey and Argentina, and we've talked about that before. This again highlights the each-way bet that gold presents and the rock and a hard place the Fed and other central banks find themselves in. Maintain easing and the bubble is inflated even more, or the burst and or debt burden even bigger. Tighten up and you drive up the USD. All the interest on that debt, burst the bubble dependent on easy money, and have a full-fledged global crisis on your hands. The penny is dropping for more and more people. Bitcoin just hit an incredible US $23,000 or 30k in AUD. Gold and silver looking like they're about to follow suit. This is big institutional and retail money alike realizing that this can only end one way. The above linked article that we'll include in YouTube and on our full article on Ainsley Bullion concludes with Herbert Steins' 1976 law stating that if something cannot go on forever, it will stop. This monetary stimulus and the relentless accumulation of the debt it generates simply cannot. The can cannot be kicked down the road continually. It must stop, and what you are left holding when it does stop is now totally up to you. Well, that's an end of news week with Ainsley Bullion. Remember, if you want to buy anything physical, gold and silver, ainsley.bullion.com.au. Anything cryptocurrency related, Bitcoin, Ethereum, and all large cap cryptocurrencies that we hold and sell, ainsleywealth.com.au. And if you're interested in our own cryptocurrency that Ainsley have built and backed and stored at Reserve Vault, please visit goldsilverstandard.com. Enjoy your Friday. We'll catch you on Monday for more news.